Welcome to the Core Formation. And in Core Formation, we do interviews, we do dialogues, we talk about how to transform from where you are to where you want to be in this world. We talk about what the difference is between motivation and transformation, and not just transforming, I want to make more money. Like, you can't make more money if you're not healthy. So we got to get healthy. And I don't know how many of you guys are doing this week's challenge for push-ups, but it's just 5 push-ups a day. So, make sure when you're on the Core 4 show on Sunday that you drop in the comments that you guys have, accepted the challenge for, our health and fitness. But, today's going to be an interesting show. And I'm looking here. I want you guys to know that I support, the UVA. But I actually, I am a diehard Hurricane. I bleed green and orange. So go Canes, if you guys can see any of that. So anyway, today we have a special treat. It's not often that you get a chance to be exposed to subject matter experts. And a subject matter expert is someone that takes the time to master skillfully the details. And what are details? So a lot of you guys think that you can have common knowledge about something. Common knowledge is nothing. I mean, common knowledge is actually hurting us because we're using all these buzzwords as opposed to, just get things done, right? Like, I hate it as a coach when I'm listening to a player try to dialogue and articulate something as an excuse. That's not a subject matter expert. That's someone that's making excuses and trying to basically just sift through things until they get to the end. So a subject matter expert is someone that masters the details, and as they become a professional, it's because when they're exposed to complex problems, they're able to address those complex problems with the skill sets that they've learned and then be creative to then solve those skill sets. And that makes us a professional. And when you do it over and over and over again, people then depend on you and they decide that you're the person that they want to hire and do the job. And as you become more skillful at even understanding how to communicate what you're doing outside of the actual task, then you can actually start to charge more for your services because the demand on your time becomes intense, right? And so as a basketball coach and trainer, anytime that I know that I want to make money as a basketball coach, I realize that the price point that I charge for training, because I'm a subject matter expert at skill development and coaching with basketball, I know that my time is valuable. So I can charge more than these other coaches that are out here because I recognize that the time that it's going to take them to get an athlete to a certain level, it will take me a tenth of that time to get that same athlete to that level. And when parents and when players really understand that dynamic, then they're willing to pay more because the cost for the time that they're spending is just different, right? So this is what a subject matter expert is all about. Today, it's his birthday, so you guys shout out and wish him a wonderful happy birthday. James Bishop, I'm going to bring him on. He's an insurance guru. James, welcome to the Core 4 show.
Thank you so much. Thank you so much, Brandon. And thank you for the happy birthday wishes as well. And to everybody out there as well.
You're looking all young. I wish I didn't have gray hair like you. Jesus.
It's coming. It's coming.
I have my hair, so
Yeah, that's the key part, right?
There's people in their 30s and 40s. That tells you that I'm up in my 50s and I still got all my hair. That's awesome. So James, welcome to the show. We got so much to really talk about, but I want to really help the community to understand what our relationship is and what you've done for me and our family. And I want to say thank you for it, because a lot of people, when they think life insurance, right, we think, oh my gosh, we're going to die, and so all of us have a timetable. Nobody has escaped Father Time. But what we should all do is love our family and believe and have faith in the legacy of what we're going to leave behind for our efforts. And I talk a lot about being productive and being a consumer in everything that we do, whether it's my coaching platforms, in helping people in their business, or whether it's on the basketball court. But, being productive and planning for, your life and your family's life beyond, that is a tough strategy. And so I just want to thank you, because the relationship that I've had with you, outside of learning that you're a subject matter expert, the relationship that I've had with you is that you didn't contact me through social media. You weren't contacting me through just flyers and sending out stuff, hey, pick James. Like, we developed a relationship before the insurance conversation even came up. And so it gave me a sense of trust that I could have this conversation with you and feel comfortable about talking about what my legacy is going to be for my family. And a lot of people don't get that. And so I want to say thank you to not just you, but all of the insurance people out here, because we all love life, right? We're all here. We're loving every day. Every day is different. It's exciting. It's new. It's unpredictable. And so to know that at a moment's notice it can end, to be prepared makes us rest easier. And so I commend all of you guys that are willing to talk to and share with families about life insurance and the hereafter. And it's just important for me to say that. So thank you for what you've done for our family, but also thank you for your industry, for what you're doing for all of us.
Absolutely. I mean, the old adage that all we can guarantee in life is death and taxes is very, very true.
Yeah.
But the other side of like insurance as well is that you have to be, you are planning for unknowns, and they're unknown unknowns, right? Are you going to get some terminal illness? Are you going to, and what does that do to your income? What does that do to your family? What does that do to your lifestyle and their lifestyle? And there's so many different ways that you can use insurance. And, we'll get into it deeper with the way that I specialize in using it as well. It can really, really, really help families and things like that.
Yeah, so let's dive in a little bit, because I don't want to take too much of your time. Our goal for our community, James, is really for people to get to know you, and so it is hard for people to you can't get in front of everybody, and they can't like peek behind the window. But when we can do an interview like this here, it's just important for people to get to know. So just tell me, who is James Bishop?
So in a nutshell, it's what you said. I strive to be a subject matter expert. Right now I'm currently getting my doctorate in economics and finance. I have my MBA in finance and global portfolio management. Working it backwards, I went to East Carolina University to get which they need some help in basketball. I'm gonna just say that we've never been good, never have seen anything. We weren't even in the NIT. We were not invited to the not invited tournament kind of deal. But where I majored in at ECU was psychology and neuroscience, and my mom I was raised by a single mom until I was like 14. She raised me on $27,000 a year. At $27,000 a year wasn't a lot of money in the 90s, and it ain't a lot of money now. That's so right. I learned an appreciation for work ethic and working hard and working for what you want, being raised in that environment. Now, don't feel sad. I had everything I wanted, because anytime we went to a store, if I said, "Mama, I want though," she'd say, "No, you got enough." So I knew I had everything I wanted, in life. But, then after in undergrad, I actually wanted to be a pilot in the military. I have a hole in my heart that precludes me from being a pilot in the military. But I tried nonetheless, and I was told, "Sorry, son, you're disqualified for military service." And after that, I kind of didn't know what I wanted to do. I worked in real estate and property management for a little while, had a great career in that, but it just wasn't a challenge. And then I worked in trading and investing and teaching people how to trade and understanding financial markets. And that's where I knew I found something, because it's ever changing. It's complex, but not too complex. But it's a constant challenge. And I love helping people find success. So I learned a skill, and then I helped others learn that skill and then hone their craft as well. From there, I worked I was looking to be a financial advisor, but I ended up going to work for a hedge fund instead. And from there, I've ended up going in two routes: commodity trading advisory firm, as well as insurance, because there's a specific client for hedge fund that is a great client, but those individuals, they're not who I want to help as much so as what I believe with insurance and CTA. Those are where my two philosophies really have, thrived and allowed me to be extremely successful. And it's where I've planted my flag and know that this is what I'm going to do for the rest of my life.
So let's jump a little bit farther back. So I get that, you're going to hire me to train all the basketball players at your former alma mater, but
Yeah.
but let's talk a little bit about like your preparation. A lot of times people don't understand what drives you. Where's your motivation? You got motivation that's intrinsic and you got extrinsic motivation, right? So extrinsic would be kind of like, all right, I'm motivated to lose weight. And so you do all this exercise stuff, you achieve that goal, and now that motivation is then gone. Whereas some people are motivated because they like the way that they feel when they're exercising. And so it's that moment that they live for intrinsically to feel that. And by the way, they're losing weight and hitting these targets all at the same time. So that intrinsic really is more important than the extrinsic, right? Does that make sense what I'm
Yeah.
saying?
Yeah.
So what is your driving force behind why you're doing this insurance stuff? Because you're so smart. I'm surprised you have any friends, but I'm your friend. You can always count on the big guy.
That's
So tell me where that motivation comes from.
Yeah, really, it's about helping people, and it's about helping people prepare for the inevitable and helping people realize that it doesn't take much, but you can elevate your family. Like I said, it really comes from growing up and where I grew up and how I grew up, and looking at the people that I was around, and they would waste money on cars and rims and clothes, and but yet when it came to other staples and preparing their kids, they weren't doing that. And I really believe in creating generational wealth and I believe it's our duty to leave to the next generation. Not, I will say, I believe that you have to leave more in them than to them, because you have to leave work ethic in them. You have to leave, the ability to and drive in them. But it also helps when you leave something to them. And, my biological father, when he came back into my life, I knew there would be no retirement for him because he didn't plan for it. It's not because he
Yeah.
didn't make enough money, because I am working with people right now that are putting away $150 a month. That's like what, 10 cups of Starbucks in a month?
Yeah.
And they can drop Starbucks and put money in an insurance plan, and they'll leave this, they'll have $3 to $4 million in retirement when it's all said and done. And that can be done for people. And then I also look at things like, you know, people insure their phones, but they won't insure their lives,
Mm,
right? They'll drop an iPhone and need that insurance, but
that's,
you're going to drop, but you
yeah.
won't insure yourself. And then the other thing is about motivation. There's actually a study, and you know me, I have to get academic, and I can't remember the exact cortex of the brain. I know it's the medial cortex, and I believe it's your anterior, or sorry, your anterior medial cortex
There
is a
you
cortex that goes across both sides of your brain, and it grows when a human does hard things, right? When it does something that you don't want to, it grows and it creates something that helps increase your dopamine, helps increase you feeling better. It's like those days where I'm sure you had it as a college athlete, and even now you don't want to go to the gym, you don't want to put up those shots, but you do it anyway, and it grows something within you to make you more driven and more successful. And I just love doing the stuff that is hard. I
go.
really do. It's why I play golf, because it's hard, it's a
It
challenge,
is hard. I'm not
and
taking
it's something I like. I don't want to go practice, but I do anyway because I want to be better. And that's the same thing I think with insurance, is that look, nobody wants to take their money and put it in a retirement account. Nobody wants to take money and put it somewhere else because we want to use it now. But if you do it now, then you'll have a better life in the future.
So let's jump on that. And by the way, I did touch the rim again, yesterday, so I'm feeling real good about myself. But let's talk a little bit about that. So what you offer is a way for people to plan for the future, but also have access to their capital that they've invested in. And I think a lot of people miss that,
Mhm.
that the money that you're putting in that's creating the cash value, you get to use that if you have a need for it. You get to use it for what? Education, if you need it, if you
Yep.
want to use it for an investment. Can you talk a little bit about that?
Yeah, absolutely. So the product that I primarily sell, and there's two that I really think are beneficial to everybody. But the first one is called an indexed universal life policy. Now, some of those terms may sound familiar, some of those may sound uh, not so familiar. So I'm going to break it down. So indexed means it's a fixed indexed investment. And so it's fixed in regards to a guaranteed return, and there's also something called a 0% floor. And I'll touch on that. If we need to go deeper, we can. But a 0% floor, all that means is that if you had, let's say, $100,000 in your policy, the next year the market goes up 10%, you now have 110. And then the next year the market goes down 30%, you still have 110. And I can explain how and stuff like that later. But the money, as the policy grows and as you continue to deposit money, and as the investment grows as well, you can actually borrow that money out at in the first 10 years at a 0.9% interest rate as of today. And then year 11 through however, you can borrow that out at 0% interest.
Mhm.
So a couple of things, right? If you are, let's say you have a kid and you want to send them to college. Well, you could you could start a college savings account, a payment, plan. A lot of those are only good for specific states or, public schools or things like that. Whereas this, if you put your money here, you're able to borrow it out at 0% interest, send your kid to college, and they can go to any school that they want to. If you want to buy a car, these days, the prime rate on a car loan is 9%, anywhere from 8 to 9%, depending on the dealer. Now, there's rebates and stuff like that that can get you down lower, but imagine paying 0% for a car.
Yeah.
You want to invest in, let's say there's a stock investment or a crypto investment or something like that you want to invest in. You can borrow that money out and think about it. Even if it's making 1%, well, your interest payments at 0.9, you are having positive cash flow on a 1% in return. So that's where, policies like what I talk about today is extremely beneficial to people.
So that was so well explained, and thank you, because a lot of us don't understand that you can use your insurance policy as an investment tool and a life tool as opposed to just a death benefit.
Exactly.
And so getting counseling on that with someone that you trust, like, I trust you, is extremely valuable. So I really know that the community is going to listen to this and say, all right, how do I go in deeper? Because the things that you talked about that they need to hear again and then again and then again is what's going to drive them to success. Most of our community is on here because they want to learn how to make money, right?
Yep.
And so when you make that money, how do you protect yourself? And so if I'm not mistaken, can't you invest in an insurance policy and the money that grows in there, it grows tax free?
It not only grows tax free, but you also get to pull it out tax free as well. So when you retire and you get disbursements, instead of, you see, a lot of people don't realize this, but many people have 401ks, and I understand that. There's a great interview, and I'll try to share it with the community soon, but with Jack Vogel, who is the CEO of Vanguard. And Jack Vogel talked about the 401k and how the 401k was designed as a savings account, not as a retirement plan. Because the moment you begin to pull out money from that account, whether it's you're 39 and do it or 60 and do it, you are taxed at your ordinary income level. So let's say you're paying 34% today in taxes and you had $1 million in there. You're losing $340,000 because of just the taxes. So a lot of people don't realize that. And I don't know about you, but everything I look at says taxes in the United States are going one way.
Yeah.
And and they rarely will ever come down. But regardless, even if they did come down, this is tax free. And that money that you make from that investment, imagine taking that money and putting into an insurance policy that gives you a guaranteed return. You'll be able to borrow it back out, and you'll be able to, it'll grow for you. Now, you can pay that money back over time, or the insurance part will actually cover the part that you've borrowed out when you pass away. So we can go into that deeper if you want to.
Well, I think really as the community gets to know a little bit about who you are, just the idea that they know that you understand that, I want them to be able to contact you and you start working with them on strategies, because at the end of the day, you're considered a financial advisor. Is that correct?
So not technically, I can't make that claim because a financial advisor has specific licenses.
Gotcha.
I would say more so I look at myself as a personal wealth advisor.
Okay.
I'm giving you advice based on your personal situation on how to protect your wealth, how to grow your wealth, and where to put money to maximize it. And what kind of risk are you okay with? Because a lot of people, they don't understand risk. You know, there's a client that I actually worked with in the past, and he wanted to do $1 million investment. And I asked him, how much are you willing to lose of this? And how much are you willing to risk? And he said, well, I'd be okay with 20%. And I said, okay, so from this million, if you lost 200,000, you're fine. And he goes, oh, no, 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 no. You lose 200,000, we're done. And I said, well, what's 20% of $1 million? And so risk is something that we know is there, but we rarely fully understand and comprehend and calculate what we're risking. And with this, you know, we're protecting your life, your family's life, and your finances all in one.
So thank you. So one of the things that I do as a life coach, as a basketball coach, you know, if I'm engaged with a particular athlete and they're going through the recruiting process, right, which is basically colleges and universities vying for this particular player to hopefully come to that school, right? And so I set rules. I set like these parameters that the coaches have to go through, which is really a test for the coach. And if the coach passes the test, which they very seldom do, then the player knows that that's the right person for them, right? And that's because you don't really necessarily all the time choose the school. You choose the coach who's at the school, and you better hope that it works out when you get there, right? So and then you have assistant coaches. So it goes into a whole lot of detail that you guys can learn more on the basketball channel. But my question is, you know, what makes you different from everyone else? So when I had one particular player, and you know, she was an amazing player, and when I gave the parameters and I said either the coach, the assistant coach, or the head coach will be able to talk to this athlete at 9:15 every Monday, and for 20 weeks to get to know the player for 15 minutes, just to not occupy her time. She was one of the top 20 players in the country, right? So everybody wanted her. But here's what's interesting. Only one head coach every week contacted this particular athlete at that time. And at the end of the recruiting process, this player knew that coach, didn't really know the school because you only get one visit at the school, right? So that's not really a definitive way of making a decision, but the relationship was there. What makes you different from all the other? Because unfortunately, and this is with all due respect, you're doing this full time. There are a lot of people that, oh, you know, well, I work here by day, but I sell insurance at night. Can I get with you to kind of talk to you about? And I know you got to start somewhere, but just by the mere fact that you have dumped everything into this versus what other people are doing, I know that separates you, but give us a little more insight as to what makes you different from everyone else.
Yeah, I think the first is exactly what that coach did with that player. Is when you ask me to be there, I will be there. If we set this meeting up a couple of weeks ago, and we said, "Hey, look," I said, "Hey, it's my birthday, but I'm willing to be there." Could I be on a golf course somewhere? Sure, but
Yes,
I
sir.
needed to be here for one of my best clients, one of my closest friends, and I wanted to do this to help out the community. And the second is I'm not a big person on bravado or tooting your own horn, but I eat, sleep, and breathe financial markets. It's what I love. I my mom's from another country, and I was raised and to have the work ethic and the drive and the research methodology of a physician and that lifestyle, and that's what she ultimately wanted to be. But I was attracted to financial markets because it was just what I love. I love understanding how things work and how economics influence different things in the market. But I also understand stocks, forex, futures, cryptos, options. Every single market out there. I either traded, invested in myself, currently am investing in, or will read up on it to where I will be an expert on it.
Yeah.
And that is a differentiator in and of itself in the industry. Is that, like you said, a lot of people do this secondarily and they don't understand the products as well as, and I don't mean to put anybody on blast. I'm not saying anything about anybody out there, but most of the financial advisors that I've met, they give cookie cutter portfolios to people. Most of the insurance agents that I've met give cookie cutter insurance policies to people. What do I mean by that? I'm going to expand on that just a little bit. So, the current financial advisor, if you were to ask them, hey, what's their opinion on the S&P 500? Where do they see it going over the next 6 months, 12 months, 1 year? They're going to hand you a piece of paper or recite a piece of paper from an analyst in New York with that company that made that choice. And they may know it or they may not know it. They're not going to sit down and tell you, this is the price, this is what I think, this is what's influencing it, this is why. Let me show it to you on a chart. Let me back it up with this information. Then they also look to put. Mhm.
Hold on, Jay. So I don't mean to interrupt you, but why would that matter? Why?
Because yeah, go ahead.
Yeah, why does it matter what the S&P 500 does and all the rest of it related to an insurance policy, right? Because I think for the community, if they hear, okay, well, yeah, I get it that you're financial markets, I get it that you're insurance, but where is that correlation coming from?
Oh, absolutely. So with the type of policy that I recommend for a retirement/investment account, retirement/investment and protection account, the Index Universal Life, they're actually invested into specific indexed managed funds. Now, the ones that I typically choose are JP Morgan, Goldman Sachs,
Mhm.
BNP Paribas, and if you understand how they are invested, which this is probably something that I believe I know very few insurance agents have ever done, because when I set down the path to do it, I got being told no one's ever done this before. Why do you care? Which is, I went through the back office, contacted these funds, and asked, how are they invested? What are they invested in? How often do they reallocate their portfolios? And why are the returns so good as compared to the S&P or your typical financial advisor? And so I take time to do that. I understand what changes they're going to make before they make them. And if you understand where the market is, where it's going to go to, you can then prepare the client. Hey, look, you know, last year, great example, late 2022, early 2023, I told one of my oldest clients, look, I want you to prepare mentally. The market is going to fall within probably for the next 6 to 8 months, and then we will see a nice rebound. And he said, okay, I understand. And I said, so don't be alarmed, but that's what's going to happen. Now, because we have an insurance policy, he has a 0% floor. So he doesn't participate in the fall, but he just sees it on the news.
Yeah.
And he's worried about his other investments as well. And so I talked him through that. I showed him what was going to happen. And then it played out just as exactly as we saw it. Then June, July of 2023, if you go and look at the S&P, it found a bottom and it began to shoot right on up.
Yeah.
And so that's why it matters, is because it helps the person put their mind at ease, understand what their money is going to be doing. And I know that's a differentiator as well. And, the last thing is that, one, I truly care, which is, some people look at this as, I got your commission, you got your policy, you're in it, bye. I'll see you later. Call me if you ever need me.
So
I will send birthday cards. I'm that type of person, That's just who I am.
well, thank you for that, because that definitely shapes a different narrative for you versus what's out there. Because I definitely know that you're different. But one of the things that, as people are learning about this, do you feel that they actually need to start to become, because we educate our community, right? And we want you to be, as I say, mind your own business.
Mm-hmm.
So there's a certain amount of knowledge that you have to have.
Mm-hmm.
Does somebody need to go into this trying to get an insurance policy and get that deep? Or is it enough that because you're their fiduciary in this particular scenario, you're enough? And that's just a yes or no kind of a question.
I'm enough, quite
Okay.
honestly, because
Yeah.
I'll take the hard stuff and break it down Barney style, is
Yeah.
what I always say. Make it easy for the person to understand.
No, that's excellent. So let's lead into, what is the difference between a CTA and a hedge fund? Because right now, and you can correct me if I'm wrong a lot, but not really. When you take a hedge fund versus, say, just going to UBS or going to Charles Schwab or whatever else, most of us think, oh, okay, I can just go there. Now, I know hedge funds do what? They pay more, correctly?
So,
correct?
yeah, hedge funds, their goal is to make more than just the S&P, the benchmark.
Does that mean there's higher risk?
There is higher risk with a hedge fund, and it's how their investments are spread. And I'd always tell people, if you're interested in a hedge fund, the first thing I'd ask is, what are your investment mandates? And I'll get into it and kind of jump in a little bit here. So every hedge fund will have a way that they manage money. And they'll say, we cannot be more than, I'm just going to pull this number out the air, 20% weighted in any particular stock. So they may put money in Apple, Amazon, Netflix, Google, Nvidia, and then once that stock reaches a certain level, they'll have to sell out of it and put that money somewhere else and rebalance their portfolios. So that's why, they're able to do that. They also use alternative assets. They use options, they use Forex, they use commodities, they use futures as well. And so they're able to take advantage of a broader market, and which helps them generate more return than the average, financial advisor will. But again, like you said, the risk is there. Now, the main difference between a CTA and a hedge fund is who's in control of your money. In my opinion, that's the biggest, most significant difference. So a hedge fund, let's say, Brandon, you came to me and said, hey, I'm thinking about doing a hedge fund. I'd say, okay, great. One, they have a certain amount of minimum, right? Typically it's 250, but Bridgewater Capital, the largest hedge fund in the world, I believe theirs is right around 2 million is their minimum. So, and it's all liquid, all has to be cash with them. Some hedge funds will go and let you do an IRA and it's held offshore and stuff like that. But your money leaves your account and comes to me. And you have to come to me if you need money. You have to come to me if you want to take money out. You have to come to me with your questions, and you have to come to me if you want to leave. Yeah. And then it takes 30 to 60 to 90 days for you to get that money. Now, that's good if you're a qualified purchaser, qualified investor that has millions of dollars and you're okay and you're not worried about it. That's fine. And I think hedge funds are great and they all have their place. CTA firms, on the other hand, they still have minimums, but you have control of your account. You have a login for your account. you can see what you're being invested in. You can see what trades are taking place. You can, you know, if you want to take money out of your account, you have that control. Not me, not anybody. You still maintain control. So, you know, for me, I like CTA firms better because I maintain my control. For others, they may like hedge funds better because somebody else is in control and they don't have to see the investment. They don't have to see it going up or down, etc. So that's the real number one largest difference, in my opinion.
And you're a part of a CTA now, is that correct?
That's correct. That's correct. Myself and another member of the community, we are partnered into a CTA firm.
Gotcha. Gotcha. No, so this is good stuff. So how do you want people to they'll obviously they get to know you on the Core 4 show because you're going to be on every Sunday giving your economic update.
Yep.
But how do you want people to be able to contact you if they want more information?
Absolutely. You can message me directly on Telegram. That's fine. And I know this is not the most common, but I'm actually going to give you my personal email as well. Because that's just who I am. I think that, you know, for this community, I have no problem doing that because I think this community is a family to me, you know. And my personal email, in case you want to know, is my last name, Bishop, the letter J86 at gmail.com.
At gmail.com.
Yep.
Does that look like it?
That's it. Thank you, sir.
You know, and I think it's important. So when everybody that's listening to this, one of the things that I like is that you can contact James and learn about what his opinion is of the life insurance plan that you have currently.
Absolutely.
Without any obligation. A subject matter expert put his education, his background up against anybody that you're dealing with now, with all due respect to him. That's like my game versus going and getting Jordan. I want Michael Jordan. So even if Michael Jordan can evaluate and say, hey, you know what, working with Brandon is a pretty good deal, so keep working with Brandon. That's safe, that's fair, that's trusting, and that's building a relationship, and it doesn't hurt anything to get an evaluation.
Absolutely.
Then also learn what else is out there, because he'll tell you that openly, and then you can go back to your insurance person and have them do it because he said, well, hey, you need to think about doing this. And now you go back to your insurance person and say, hey, I heard about this. What are your thoughts on this? Say, oh, you know what? I didn't really think about that you would need that. But now that I hear that you understand it, let's go ahead and do it. That's what you get with James. And then, hey, if you decide that James is what's best for you, then that's something that you'll make a decision on. That's not my decision. That's not James' decision. Our decision right now is to let you know what's out there. James is available. James is a subject matter expert. James is being the best that he can be. And James is surrounding himself with people that inspire him. And that's why he is my friend. I hope that you will be James's friend too. I've enjoyed the journey. I look forward to so much more, James. And thank you for you being you. I appreciate you coming on.
Thank you. And thank you for having me.
All right. See you guys at the Core 4 show and more. Bye-bye.